Welcome back to our series on financial basics, and we continue looking at break-even analysis, otherwise known as BEP, which is break-even point. This is part 2. My name is Boomy Tokan. The formula we're going to use today is quite different from the one we used in the first video. In the first video, though, we calculated the break-even by units, and we said to get that figure, that would be fixed cost divided by contribution will equal the break even in terms of the number of units we need to sell of our course, as the example we use, to actually cover all the costs related to the business. But in this video, we're going to look at break even in terms of sales volume. And to calculate that, the formula is break even units multiplied by selling price, and that should give us the break even in terms of sales volume, which is how much in dollars do we actually need to be making to cover all our costs. We're going to carry on with the example we used in the last video, which is a business selling digital information products online with a selling price of $100 per course, and the variable cost, the cost of goods sold that relates to each sale, is $20. The fixed cost of the business is $2,000. The contribution is $80, and we get the contribution by deducting the selling price from the cost of goods sold, or variable cost, to give us the contribution. And then the number of units needed to cover all our costs is 25 units. Once we sell 25 units, we've actually covered the costs that the business has. All right. In this example, though, to calculate the sales volume in terms of dollars, it is break-even units, which is 25, multiplied by selling price of 100. And that's what we have right here. So let's do the figures. So sale price of $100 multiplied by break-even units of 25, and that would give us $2,500. So $2,500 is the amount in monetary terms we actually need to sell to cover all the costs of the business. So in the first example, we needed to sell 25 units to cover the cost. But if we look at it, if we wanted a figure to tell us how much do we need to sell in terms of sales volume or monetary value, that would be $2,500 worth of products. Now, it's going to get really interesting when we get to example 3, where we calculate the break-even in sales volume and units if the sale price drops by $10 or if it increases by $10, because we'll be able to determine what the best price is for our product. All right. In this video, we've covered the example of break-even by sales volume, what it means, the break-even formula, how to calculate it as well. If you like this video, like it. If you like it, share it. Subscribe to my channel. Write a question or comment below. I need your feedback, please. If you have a private message, then email me to boomy@startyourownbusinessacademy.com, and I'll see you soon.